All right, I tweeted this morning. I said, we are one good inflation reading from Bitcoin hitting $30,000. We had a good inflation reading, and now we got Bitcoin at $26,390. Now, it's not about the price, because I'm going to show you on this show that we have broken a massive, massive, massive resistance point for Bitcoin, probably the most important resistance of all time. I'm also going to show you why this chart over here, which is the Bitcoin dominance chart, looks like this, because we've been saying all along that we think Bitcoin dominance is going to come down and people are going to go into altcoins, but it looks like people are going into Bitcoin. I'm going to show you why people are going into Bitcoin. Then we're going to work out whether or not we should be moving more money into Bitcoin, or whether this pump is actually going to be coming into altcoins. And then, of course, today I've got our friend Gareth Soloway with us. He is present. Let us know if you're present in the comments.
Get the fuck out of bed, bitch. Go. Get up, and then they got go. Time to wake up, bitch. Get up. Get up. Get up.
These are the days we live for in the crypto market. These are the days we live for. I love these days. Look at Bitcoin, 26,300. I did say earlier that we were one good inflation reading away from $30,000. I think we might actually get to $30,000 much quicker than we think. That's what we're going to talk about. What is the route for Bitcoin now? I'm going to also show you that Bitcoin has broken a critical resistance point, the most critical resistance point that we've had in a long time. So today is going to be a massive, massive, massive show. We have had the inflation numbers coming out a few minutes ago. We could just look at the inflation numbers over here. So here are the inflation numbers. We were looking at a 6% CPI number. We got exactly that. We got a 6% CPI number, which is exactly what the market wanted. Now, we should have known this, because Joe Biden did come out the other day and he warned us. When the White House usually warn us, he said, look, I'm optimistic that the next CPI print will be in good shape. And we got our 6%, and that sent the markets absolutely flying. And when you combine that with the rest of the events of this week and this banking collapse, let's look at what's happened to the probabilities of a 25 basis point rate hike. Now, look, I haven't refreshed my page at all. Okay, so this probability here was before we started the show. There was a 25.5% chance of no rate hike and a 74.5% chance of a 25 basis point rate hike. I'm going to now refresh my page. So 3, 2, 1. Let's do it. Let's see what happened here. Remember, it was 25% for no rate hike. Now it's gone higher. There's more of a chance of a rate hike, which is absolutely confusing to me. But to help us make sense of all of this, I've got Gareth Soloway with us here today. Before we bring him on, guys, if you are new to the channel, subscribe to our channel. Join. We're the fastest growing channel now by far. We've got, I think, nearly 612,000. In fact, by the end of the show, we will have 612,000 subscribers. We do have 612,000. I mean, we're growing faster than I can even keep up with. Also, like this content. Yes, and lots coming up on the show. There's a lot coming up on the show. We're going to talk about why this Ethereum Shanghai dump isn't going to be as big as we originally thought. I've got all the data for us right here. Then we're going to talk about a whole lot of altcoins, which I think are going to run. We're going to talk about why people are going into Bitcoin. We're also going to talk about Operation Choke Point and how serious Operation Choke Point is. So lots to talk about. But first, let us know if you are present. So David Burt, if you're here, say present. Nick, I'll join you for a party tonight, only if you say present. Benny Black, if you're here, say present. Josh, are you here? Present. James, are you here? Present. Fred? Hold on, what's happening here? See, my phone's also present. All right, let's see if Gareth Soloway is here. Gareth Soloway, are you present?
I am present.
Present. All right, Gareth. We are cooking on Bitcoin after the CPI print. Let's look at the charts. Tell us what's happening here.
Yeah, so you're right. So basically, part of the reason why we see a more likely chance of a rate hike next week is, number one, like you said, the CPI came in line with what expectations were. Markets are rejoicing on that. And also, let's be fair, we haven't heard about a new bank failure since yesterday, really, or since the weekend. So the markets are calming down a little bit. There's not as much fear out there of contagion, and that means risk on. Bitcoin is just ripping here to the upside. Now, the one thing is, and I agree with your thesis that 30,000 could be on the horizon, but just be aware you're right into some resistance, this upsloping kind of channel level. Let's watch to see how Bitcoin reacts right at this level here.
So, Gareth, I want to show you something on my chart. I'm not a very good chartist, as you know, but I have done your course recently. A very good course. Very, very, very good course. So you see this red line over here?
Mm-hmm.
It's the Bitcoin 200-week moving average, which is the biggest trend line that Bitcoin's got. Now, if you zoom into this trend line, it looks like for the first time, we're actually back above the 200-week moving average. We broke below the 200-week moving average when FTX, or just before the FTX collapse. That was in August 2022. We've tried multiple times to get above it. We haven't been able to get above it. We're now back over it. And if we close over it, it's the first time that we've closed over it on the upside since around July 2022. How big is this 200-week moving average?
Yeah, there's no doubt about it. It's important. It's psychological for the market, and for investors. So let's see if we close above it on the weekly, right? That's the 200 weekly moving average. So what you're going to watch for is on Sunday night when the candle closes for the weekly, let's make sure that it's above that. I think that's number one. So here we are. We're only on Tuesday. So it's good to kind of keep an eye on it, but don't get too excited until we see that daily close or the weekly close above it.
Okay, so what do you think happens next? This pump does feel like it's a combination of a short squeeze, and usually short squeezes aren't really things that last very long, so to speak. You know, you get the short squeezed out. Once the short squeezed out, then the reality sets back in, and it's like then we have to face the fact that the Mt. Gox coins are coming back into the market. We have to face the fact that, I don't know, whatever else can happen in the market. What do you think?
Yeah, so just to give you a sense of what I'm doing here, so on this latest dump down here, right? So if last time that you had me on, we were trading right off of this area here. We talked about this bear flag. I was short a bunch of cryptocurrencies. We were talking about the rollover. I did cover those cryptos down here when we got the fear and panic the other day. And then I ended up flipping into some longs. In this latest move up, I've gotten out of most of my crypto, in fact, all of my cryptocurrency long positions, and I just unloaded my Bitcoin long right up here. Now, please understand, everyone that's hearing this, I'm a very short-term trader, so this has nothing to do with where Bitcoin is going to be in 2 weeks from now. It's all about short-term 3-bar surge, 1, 2, 3. That's an exhaustion move, and we're into this upper level. So for me, I actually did nibble on a little on the short side here, shorting Ethereum up in this range as well. And again, that's a very quick trade. I'm looking for a couple-day pullback, but ultimately, again, my guess is we're going to get some sort of retrace before we get that another move up.
Gareth, long term. Let's talk about longer term. We had the banking collapse this weekend. We had the Fed basically tightening until something broke. Something did break. The banks broke. Now the Fed has agreed to almost backstop all depositors. What are the implications of this move by the Fed? What do you think happens? What has the Fed said to the market?
Well, so let's be honest. Number one, this is the Fed causing the banking collapse. That is the culprit, right? The Fed basically said transitory inflation, now 2 years ago, whatever it may be, and they were blinded and they didn't see the inflation coming. What ended up happening was they had to overreact and jack rates up super, super quickly. That then put a strain on these regional banks and a lot of the banking system and caused it to break. So again, we look at, you have to ask yourself, and this is what I ask myself all the time, does the Federal Reserve actually benefit the financial system, or does it hurt the financial system? And I think you could argue that it actually does more harm than good. And we've seen that throughout the ages of what they do. But bottom line is, at this stage, yes, the government's backstopping deposits above 250,000, which is the FDIC insurance level. But again, I think this is a short-term fix. And if there's any reason to get more bullish on crypto, I mean, look at this. When you see the fiat money system in disarray, hey, Bitcoin looks pretty dang good.
That's what's happening on Bitcoin. That's one of the things that's happening on Bitcoin. We're going to talk about that later on in the show. I've actually got some data to show what's happening here. Gareth, take me to the Dixie, because I see the Dixie at 103.5. And the last time we spoke, this thing was at about 106. And we were talking about whether or not you said it would probably hit big resistance at about just under 106. I think you were spot on. I think that was a turning point. Yeah, you said that the resistance was about 105.62. That's where it was.
Yep.
That was before we got there.
Mm-hmm.
Now we're on the way down again after this bank collapse. What do you think?
Yeah, so my guess is what in general you'll see is further downside on the dollar, which will be good in general for commodities, cryptocurrencies as well. And I think the big pivot here is that you're getting in a point now where the Fed has to realize that if they're going to hike rates anymore, they're going to break more of the financial system. And so they're going to have to back off. It doesn't mean we won't get a quarter basis point, maybe one more time. But my guess is the Fed is pretty much done here. And that's what Bitcoin is sensing. That's what crypto is sensing. And that's what also the money flowing into stocks today and yesterday is as well. So the Fed is virtually done hiking now, basically because they've broken the system and they can't do it anymore.
All right, so take me to the S&P then. If you're saying that there is an effect on the S&P, let's look at the S&P 500. It broke down below the channel, like you said.
Yep. Yeah, absolutely. So this was that channel we talked about. We did break down, and this is where things diverge. Usually a weaker dollar is good for the stock market. I think in the near term here, you're going to get a retrace back to this low-end trend line. So there's a tendency once you hit a trend line a bunch of times, you break down, and then there's this kind of nature of markets and psychology to retest that line, right? So you go back to kind of test home base where you broke down. Then my guess is your next move is in the stock market is to the downside. I think that's going to be a big move to the downside here. And again, the thought process here is that the system is now breaking. What we're going to see is actually the markets start to head towards recession. I think, remember, we talked about the second half of 2023 as being the recessionary period where recession hits. The Fed is going to be unable to really cut rates substantially, even though they're not going to raise more. They're not going to be able to cut it substantially because we still see inflation out there above the 2% mandate. And that's going to be really problematic for stocks, not so much for cryptocurrency. Crypto is going to have the toughest time because the stock market is going to be risk off. So it'll take a little bit away from the crypto markets. But for the most part, stocks are going to suffer the worst, in my opinion.
I think the S&P is not a good reflection because there's a lot of banking stocks in the S&P. There's a lot of financial services stocks in the S&P. They've all been completely obliterated by the banking collapse. So I think the S&P is not a good measure. Let's quickly look at gold because we don't really always look at gold. You love gold. I mean, you're actually 𝗕𝗆𝗃 in disguise.
That's not true because I'm not like an only
No,
gold.
no, you're not. But you do love gold as much as 𝗕𝗆𝗃 loves gold.
That's true. Right now I do. Correct. Yes.
Look, also a God candle on gold. I mean, if you look at it, a big God candle on gold.
Yeah, no doubt about it. And again, so the key is with me with gold, and one of the reasons why I like it in this period is that to me, if inflation stays high, people are going to have to buy gold, right? If inflation comes down, but the economy spins into a recession, maybe deflationary serious, then what is left to buy? You could buy some Bitcoin or you could buy gold. And there's still a lot of money that doesn't trust crypto yet. And so gold is that play. So the reason why I'm so bullish on gold is that it kind of works in either scenario for the stock market going up or down and any which way. So yes, I am continuing to be that way. I want to show you guys something. This is one of the crazier charts on gold here. So what we're looking at here is the move in gold from 2018 up here, and this is now from 2020. So from 2018 to 2020, and from 2020 now to 2023. What you want to check out is this is going to blow your mind, right? Let's go back in history to the last time we saw gold. Excuse me. Let me go to my monthly chart here. The last time we saw inflation at these levels was in the 1970s. And look at this move that we saw, right? You had an up move for about 2 to 3 years, pullback consolidation for 2 to 3 years, and then look at the run on gold. So if inflation is going to be reminiscent of the 70s, which is the last time we really saw it like this, then you could be looking at a major move up over the next 2 to 3 years in gold. I'm in that camp that I do think gold is going to rocket. I also think Bitcoin eventually is going to rocket. I just think there might be some more hardships in Bitcoin first.
Before I let you go, I mean, this is a chart we never really talk about, but let's talk about silver for a second. Mm-hmm. Take me to this to silver, because there are a lot of people that say that silver trails gold, but silver's been a little bit dead, right? It's been like this, like this dead commodity, so to speak.
Yeah. So you're right on that. Silver has lagged. And the problem with silver, and listen, overall, I'm very bullish on silver as well as a commodity. When you have higher inflation for a long period of time, inevitably it's going to do well. The problem with silver, it's also an industrial metal. Remember, it goes into car batteries and all this other stuff. So if you do get a bad recession, there's going to be a part of a lower demand for it from the industrial side, which makes it a little trickier. Now, overall, silver has a historic means of outperforming gold, and I think ultimately it will. It's just in this uncertainty period going into maybe a recession, it's having a little bit more trouble here. I think ultimately.
Okay, so guys, before we let Gareth go, what you need to do, you go to the bottom of this video. I want to just show you exactly what you need to do. Hold on a second. So you go to the bottom of this video and you see over here, there is a link to Gareth Soloway's channel. You see, it's just over there. Just click on the link to Gareth's channel. I'm going to click it now because I want to see how many subscribers he's got. He's got 72,900 subscribers. Now, we need to obliterate that.
Good morning, everybody.
We need to obliterate that. So what you need to do, you need to go there now. Now, I'll wait. I want to watch this happen in live, in real time. You need to go and obliterate the subscribe button on Gareth's channel. We're doing some amazing things with Gareth. In fact, we're talking about bringing you guys a free version of Gareth's a full version of Gareth's trading school right here on Banter. So listen, go and subscribe. We're doing amazing things. Gareth, I know you need to get to some of your streams. Much love, bro. Well called last time.
Thank you so much, Fran. You're awesome, buddy. Take care.
Yeah, wait, but I've got a message from you from our friends in China. They say, congratulations on all your calls and
Much honor.
Much honor, much honor, much honor. Much honor, guys, and much love for you guys. Much love for you guys. I'm so excited about what's going on here. Let's quickly go there. I know Bitcoin actually just came under 26,000, but it's a fraction under 26,000. It's like it's just taking some air before it goes into the sky. We do have to talk about this dominance chart because this dominance chart is doing something which is uncharacteristic and something that we didn't actually speak about. We're going to talk about what this means. Does this mean that Bitcoin is going to continue to go up and the altcoins are going to continue to sit back? That's what we got to talk about. But I just have to check because I actually went long on, I went long Blur, I'm up Blur and I'm up Injector, but I'm still down on my near protocol from before the pump. So okay, I just needed to check that before we continue with the show. Just before we get into the show, what I need you guys to do, we need to just have a moment of silence for the bears. And also I think we need to have a moment of silence for this poor Korean streamer. I don't know if you guys watch this guy. Before the CPI pump, he was minus $619,000 down. Look at this. Okay, so he was minus 600. He's cross leverage 57x. He was minus 618 down. I actually want to fast forward and see if he got liquidated. So here he's down $699,000. Oh, and there all his positions are gone. So I think he must have been stopped out. He got stopped. He must have been stopped out. Let's quickly go. Yeah, he must have been stopped out. I mean, there's not. What did he do? How did he make his money back? He must have been stopped out. Okay. Anyway, let's just take a moment of silence for this poor guy if he was stopped out, and if he managed to turn around, that's absolutely amazing. All right, so let's get on with about the inflation numbers. We expected a 6% inflation number. We got a 6% inflation number. What that base? He got liquidated. Saito got liquidated. Okay, so it got liquidated. What? I wonder how much it was. Also, another moment of silence we should spare for Jim Cramer.
Please don't assume, therefore, that it's not still being manipulated. And I would sell my Bitcoin right into this rally. And believe me, I had been a believer one time in Bitcoin. Not here, not now. Please
not here, not now. Well, I'm a believer, especially when I look at this chart. All right, so we got the inflation numbers. We were warned about the inflation numbers. We know that when the White House warned us, that means that things are going to be good. Biden said he's optimistic about the inflation numbers. As I said, we were expecting 6%. We got the inflation numbers short. So they went in short. You can see that the funding rates were actually negative, and a lot of the people actually went into the inflation numbers short. We got the inflation numbers, but the inflation numbers probably were manipulated or are manipulated. And I want to show you what happened in the last week to change the inflation numbers. The first thing that happened in the last week was they changed the way, the government changed the way that they measure the inflation numbers. Now, they didn't change it months and months before. They changed this on the 8th of March. And they changed a specific change around new car categories. It says clarifying cars represent about, so it says posted this change on March 8th, data being released this week. New cars is the category, represents about 6% of CPI. Clarifying car the internet keeps on cutting out. Let me try and get onto the Wi-Fi. 1 second. Maybe I can do that. Otherwise, if you guys jump on, if you guys just jump onto the stream, I will log off and log on. Okay, so you guys jump on. I'm going to log off and log on. That should be better. Am I back? Is it working? Is it working? Can you guys hear me? Can you guys see me? Okay, amazing. All right, cool. So they did make this change for CPI in specifically around new cars, and uncharacteristically, they published this change on March 8th for data being published this week. And the change makes inflation more favorable because of the new car sales. So you can see that the numbers here are actually being manipulated. And I think it is because the Fed was realizing that the increasing of interest rates actually makes is breaking the banks. And when they realized that, they realized we've got to show new inflation numbers. And I think that that's what happened here. They've got to show new inflation numbers. People say market coming out of pump. I don't think market's coming out of pump. Let's look at the pump together. 26,024. I think that the market is actually in a mega pump. And we're going to talk about which tokens are going to be the ones to pump in a second. All right, so now we have the inflation numbers, and the inflation numbers came in as per expectations. The big question is what happens at the FOMC next week, because that's the next domino of the puzzle. Because now, as we speak, the inflation numbers are as they speak, are as expected. But remember that we had the Fed increase interest rates way too fast. And because the Fed increased interest rates way too fast, they broke the banking system. And if you want to see a visual representation of how quickly the Fed raised interest rates, that is a chart of how quickly the Fed raised interest rates. You can see that never in modern history, when I say modern history, as long as I was been alive, never have the Fed increased interest rates so aggressively. So you can see even with all the other increases in interest rates, the increases in interest rates were very gradual. This time around, the Fed increased interest rates way too quickly. What they realized is that now they're actually starting to break the banks. That's what's pretty much going on. Let's look at what the market expects next week from the Fed. So I'm going to refresh this because this changes very quickly. Okay, so now there's a 20% chance of no interest rate hike, and there's an 81% chance of a 25 basis point rate hike. 50 basis points is now completely off the table. Let's look at what we expect the interest cycles to be. So it looks like right now, the peak interest rate is actually the one that happens next month. So it looks like there's going to be one more interest rate increase next month and maybe one after that. And then the market is actually starting to price in rate cuts this year. So quite interesting that we've had a pivot from the market from rate hikes, and now they're talking about rate cuts. I did see all the banks coming out yesterday saying, NatWest said, we don't believe that the Fed will hike rates in March. Barclays, I think, also said this. Last week, they called 50 basis points. Now they're saying probably no rate hike in March. You've got Nomura. Nomura is actually saying, so get this, Nomura is actually saying that they expect rate cuts in March. But I mean, Nomura's always been wrong. They called for a 100 basis point rate hike in September. They've always been wrong. So don't pay too much attention to that. Net, the market is pricing no more or one more rate hike. And then from that point on, the market is actually starting to price rate cuts this year. So it could mean that we actually did get to this point at the end of the cycle where the Fed actually breaks something. And when the Fed actually breaks something, that is usually when they pivot. And you can see that what the market is starting to publish right now, or what the market is starting to price in right now, is actually 0.75% worth of rate cuts this year. That, to me, is a Fed pivot. And the Fed pivot is just one of the reasons why Bitcoin is doing what Bitcoin is doing. It's this Fed pivot. But there are a whole lot of other reasons why Bitcoin is doing this. This is not a coincidence. This is, remember last week, we were actually a little bit more bearish. We were obviously bullish long term, but we were a bit more bearish about the short term because we said, there's the Mt. Gox coins which are coming onto the market. We have to price in the effect of the Mt. Gox coins that are coming into the market. We have to price in the ETH Shanghai overhang, which we're going to talk about today because I've got some great data about that. And in just a week, everything changed. We went from 19,000 on Bitcoin to now being above this 200-week moving average. And if we can get over this 200-week moving average and we can stay here until Sunday, someone says 𝗕𝗏 got liquidated. I hope he didn't, but rest in peace, 𝗕𝗏. I have been telling him from a long time that the biggest thing that you can do is change your direction. You got to change. You got to know when it's time to change direction. The problem is that when you get addicted to clout, then you become the bear. Everyone follows you as the bear. And the problem is that his tweets get so much engagement that I think a lot of people actually got wrecked. And I really hope they didn't. I really hope we can help them out of it. Anyway, long story short, what we're witnessing now is you're witnessing a complete turnaround in Bitcoin. No matter who you are, no matter what metric you're looking at, by now we have passed every single metric that puts us into Bitcoin positive territory. And if we close above this 200-week moving average, which is, for me, the most important long-term trend line on Bitcoin, you can see it's only ever broken below it once and then twice over here. That is the only time that it's ever broken through it. This is the COVID collapse. Here, there was a mini break, just a little wick down. This is the most important trend line, and we've crossed over it. Not only that, at the same time, we've got dominance. Now, look what dominance has done in the last couple of days. This 45% dominance was a great big resistance. We obliterated it. In 3 daily candles, we obliterated the 45%. The next resistance, real resistance, I'm not talking about small resistances, but the next big resistance for dominance is 48.46. And the big question is Bitcoin dominance actually going to get to 48.46? That would mean that the price of Bitcoin goes up and the price of all of our altcoins don't go up as much, which is not an ideal scenario for us, right? Because I think a lot of us are much more in the altcoins. So it's important that we look at Bitcoin and that we try and understand what it is that is causing people to move into Bitcoin. So we know right now that the move is much more a Bitcoin move. Why is Bitcoin going up? I can tell you one thing. It's not because people from the US are moving into Bitcoin. That's not why it's happening. And I've got some stats to prove this. We do know that there is Operation Choke Point happening in the US. And through Operation Choke Point, what the government has done is they've shut off the 3 biggest on-ramps and off-ramps of crypto money in the United States. They shut down Signature Bank, they shut down Silicon Valley Bank, and they shut down Silvergate Bank, which is the 3 biggest on-ramps and off-ramps for crypto. And what we can see is that the market depth in the United States, if you look at the US exchanges, which is Kraken, Gemini, Coinbase, and Binance US, you can see that they're having huge disruptions. And as a result, the liquidity in the US market is actually starting to move down. So this isn't moving because of US liquidity. The reasons why, there's a whole lot of reasons why Bitcoin is moving. The reasons why Bitcoin is moving are super important. The first reason why Bitcoin is moving is because of this chart over here. This chart over here is, I love that. Real Raid says it's Operation Joke Point. It's not Choke Point, it's Joke Point. I don't think it is Joke Point, but I like the sentiment behind it. So this chart over here shows the global liquidity. Now, remember I said to you that the US right now, up until about a week ago, up until Friday, was actually on the path of reducing liquidity. They were on the path of tightening, increasing interest rates, buying. They stopped their buyback program and they're starting to take liquidity out the market. And that you can see in this chart. You can see that if you look at US liquidity has increased, but ever so slightly. Problem is that when you take Chinese liquidity and you take Japanese liquidity, so you look at what the Bank of Japan is doing, which is the orange one over here, and you look at what the yellow is doing here, which is the People's Bank of China, what you can see is that they are putting more liquidity into the market. So this pump is actually being driven a lot by Asian liquidity coming into the market. And as a result of this liquidity that is coming into the market, all of a sudden, what you're starting to see is two assets actually start running. The first asset actually to start running is gold. So let's look at the gold price. I know Gareth did show us the gold price. Let's quickly look at it. But gold was flying. So let me just quickly try and open gold. Here we go. Yeah, gold is at $1,904. And the other chart, which is actually moving up, is Bitcoin, because when there is more liquidity, you can see that the assets that go up are Bitcoin and gold and stuff like that. And Japan is very much putting money into the market. In fact, they're buying $5.2 billion worth of exchange traded funds. So they don't usually buy equities, but this time, since the Bank of Japan revealed on Monday evening that it stepped into the Tokyo equity market for the first time since early December 2022, buying $5.2 billion worth of exchange traded funds. So while the US is tightening, the Japanese are going, hold on a second, no. We are actually putting money into our economy. China is doing the same thing. The US did actually loosen some liquidity, and now the market believes that they're going to loosen a whole lot more liquidity because of what's going on with Silvergate Bank and what the Fed has done. And if you see, when you take liquidity out the market, banks collapse. And what you can see is that in the US, the banks have started to collapse. But the new banking system, Bitcoin, actually starts to increase. And so what we are noticing here is that with this banking collapse, people are starting to realize that you're not safe in the US banks. You're not safe in the US banks. They realized that the Fed, through its aggressive tightening, has actually broken the banking system. And Bitcoin's promise, this Bitcoin was created in the 2008 financial crisis when the banks were collapsing and because the banks were collapsing. And now what you're seeing is that in this market, the smart money, hold on. What are you seeing here?
Squeeze. What's happening, bro?
Tino. Aren't you supposed to get your wife?
Are we going for a steak tonight? What are we eating, bro?
Lobster, bro. You're not supposed to be at your wife's birthday.
Dinner's on me. Dinner's on me.
So what you can see here, guys. I love that guy. What you can see is that people are starting to realize that as the banks collapse, you want to be in control of your own money. And so what you can see in the last couple of days is you see, this is a very, very, very important chart because it's not a chart of the last 20 years. It's a chart of the last weekend. And if you look from before the weekend, all the banks started to collapse and Bitcoin started to go up, which is exactly why we wanted what we want to see. People are starting to realize that crypto is a very, very resilient asset class. We saw that this weekend, even though the second biggest stablecoin provider had 3.3 billion or 8% of its funds in a US bank. The point of vulnerability was actually the fact that it was in the US bank. And so that's what people are starting to do. They're also starting to realize just how resilient crypto is. So even though we've had the collapse of FTX, we had the collapse of SVB, we've had a bear market, Bitcoin is still trading at $26,000. And people are starting to believe that Bitcoin is actually a much safer asset than they originally thought. Then the other thing is around things that are actually happening on the Bitcoin protocol, which haven't been happening for a long time. So let's talk about specifically what's happening on Bitcoin right now, which is making it so exciting and getting people to put their money into Bitcoin before they put their money into everything else. So there are a couple of things that are happening. The first thing is we have the halving. And we know that once you get past a certain point, close enough to the halving, generally you begin the cycle towards the all-time high. And what we're seeing now is we're seeing exactly that play out. We're 1 year away, 1.5 years away. We're over 70% towards the halving. Now, when that happens, as per this thing, we're going to get closer and closer and closer to getting into all-time high territories until eventually just after the halving, we get into all-time highs. This is the most reliable indicator of bull markets, is looking at the halving. And as I said to you many times before, I don't like that indicator because that indicator means that for my short attention span, I have to focus on a 4-year cycle, but it is the most reliable indicator for the halving. The other thing that we have is the banks failing and people realizing that actually why Bitcoin was created. They're realizing that when the banks fail, the only safe asset that you have is one that's not in control of the banks. I mean, even the USDC stablecoin, the US dollar stablecoin wasn't so stable. And the reason why that wasn't so stable was that it was stuck in the central banking system, in a centralized banking system. So that's the second reason. People are realizing that Bitcoin is the ultimate bear asset. The halving is 1 year away. But then there is another narrative happening on Bitcoin. There is a layer 2 happening on Bitcoin. Up until now, Bitcoin has always been treated only as a store of value, only as maybe this new age digital gold, or maybe this digital money for some people who believe in the Lightning Network. But now, since they added on these inscriptions or these NFTs that have launched on Bitcoin, that's created a whole new industry on Bitcoin. So all of a sudden, people aren't just looking at Bitcoin as a store of money, but they're talking about, hold on, Bitcoin is the ultimate store of money. It is the ultimate decentralized asset. And now you can actually do cool things on Bitcoin. And that's why we had things like Stacks running, which is the layer 2 smart contract on Bitcoin. We had the NFTs, which are running on the ordinals NFTs, the inscriptions, which are running on Bitcoin. But then we also have protocols which are related to Bitcoin, which are starting to do amazing things on Bitcoin. Now, this is a protocol that I'm invested in. I think a lot of you guys probably also at some point invested in, and that's THORChain. Now, we have been in a bear market, and THORChain hasn't really done so well. So let's quickly go look at the THORChain chart. That's the RUNE chart. And I want to show you how this is related to Bitcoin. So if we take the RUNE chart, it's not a pretty chart. It's gone down from an all-time high of about $20, and it's back at $1.47. But in the background, what these guys are building is they are building a full DeFi ecosystem on Bitcoin. And specifically what they've done now, they've shipped the first Bitcoin lending platform that works only on Bitcoin, not on Ethereum. So in other words, you don't have to wrap your Bitcoin on Ethereum. But if you look at it, you can see that they sent 0.03 Bitcoin to THORChain's Asgard vault. They got back 0.016, which is a collateralized loan. Then they repaid their loan and they got their money back. So what they have built on THORChain is they've actually built a Bitcoin lending platform. So what you're seeing here is you're seeing this perfect storm for Bitcoin. One, the banks are collapsing. It was created for the banks to be collapsing. Two, there is added functionality on Bitcoin. All of a sudden, there is this added functionality which allows for smart contracts and NFTs and a whole lot of other cool stuff on Bitcoin. Three, you're seeing a whole lot of increased liquidity in the market. So you're seeing, as I showed you, this is a very important chart. Even in the US, liquidity has been increasing, even though they're trying to reduce liquidity. But actually, you can see that Asia is driving super increased liquidity. And so when you add that all together, of course, what you're starting to get is this huge run on Bitcoin. I also think, by the way, that we're also experiencing a short squeeze here. So I don't think only that this thing is about Bitcoin. I also think it's about a whole lot of Bitcoin shorts. And so that is where we're at. We're experiencing the effects of all these beautiful things and the increase in liquidity, which is absolutely amazing. And I want to point out to you, very important, very, very, very important. I want to point out to you that all of this is before CZ has deployed his $1 billion worth of BUSD. He said he was going to take $1 billion worth of BUSD and he was going to invest it into Bitcoin, Ethereum, and BNB. And if you look here at the wallet, let me just quickly zoom. There we go. So if you look at the wallet here, I'll zoom in for the guys that are watching this on mobile phones. You can see that he hasn't even started to deploy the $1 billion. The $1 billion is fully intact. Now, you remember what happened when Do Kwon deployed his $1 or $1.5 billion. And I think actually the prices were more or less the same when Do Kwon started to deploy his money. Let's quickly go back. It was around June. Was it around June? It was around here. Okay, I think the prices were a little bit higher when Do Kwon started to deploy and then Luna went down. So you can see that Bitcoin went from 32 to 45,000. Now, CZ said he's deploying $1 billion. And the reason why he is deploying $1 billion is because he understands, after having seen what he saw this weekend, that you cannot be in stablecoins. I know it sounds crazy. I know stablecoins are supposed to be very, very, very safe, but you can't be in stablecoins. If 𝗕𝗏𝗄𝗧𝗏 and Circle showed us one thing, they showed us that your stablecoins are not safe because they are exposed to the traditional banking system, and the traditional banking system is exposed to two things. The one thing it's exposed to is regulators. We saw that with the SEC taking on BUSD. It's exposed to the regulators. The other thing that it is exposed to is it is exposed to the banking system, the centralized banking system. And when you combine those two things, it's not a pretty picture. It's not somewhere that you want to be, especially in a time where the Fed is raising money so quickly that the banks are starting to collapse. You know that all these stablecoin providers are holding their money with centralized banking entities. Tether is holding their money in centralized banking entities. USDC is holding their money, as you've seen, or some of their money in centralized banking systems. This is what the centralized banking systems look like at the moment. This was yesterday. Bitcoin was up 8%. Ethereum was up 5%. This was the small banking sector. And even though we had Joe Biden come out yesterday, you saw this, but Joe Biden came out yesterday and he assured everybody that their money would be safe in the banks. I mean, you saw this. I think it's crazy. Just he says the banks are. I mean, let me play it for you.
Thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. All customers who had deposits in these banks can rest assured, rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll.
So he's giving people confidence, but what is the confidence? The confidence is that if your money fail, if the banks fail, you will be bailed out by the Fed. And if you are bailed out by the Fed, what does that actually mean? It means, well, we are going to print more money. And that means that there's going to be more inflation and your money is going to devalue. It is crazy. It is absolutely, absolutely, absolutely crazy what they're saying here. The market's not buying it, which is why they are selling all these small banks. And you know what the pity here is? The pity is here that as they sell the small banks, the banking giants, the people like JP Morgan, Chase, and Citigroup are saying that they are trying to handle the largest movement of deposits in a decade. So what has this whole thing done? The Fed has increased interest rates so much that what they've done is they've crashed all the small banks, eliminated all the small banks, or are eliminating all the small banks. And who's winning is the big banking giants. That's all that's happening here. It's a transfer of business and of wealth back to the biggest centralized custodians that we are trying to break away from. That is what's happening here. That's the whole thing that's happening here. In the process, we lost some of our banks. We lost Silicon Valley Bank. We lost, I'll show you. There's a good visual that I had of it somewhere here. Here we go. Jesse Powell said, look, we lost Signature Bank, we lost Silvergate Bank, we lost Silicon Valley Bank. So you can see we're starting to lose all of our banks. And yesterday, one of the directors of the Signature Bank, his name is Barney Frank. He came out and he said, I think what happened was that the regulators wanted to send a very anti-strong crypto message. He says, we became the poster boy because we had no insolvency issues based on fundamentals. So he's saying that this bank was actually shut down opportunistically by the regulators without actually being insolvent. And now there's a big investors and shareholders are up in arms saying, how could you close these banks, and specifically this bank, when actually this bank had no liquidity issues? This bank was actually solvent. How do you close down a solvent bank? That's pretty much what happened here. So that is part of Operation Choke Point. And in Operation Choke Point, what's going to happen is all these small banks are going to be swallowed up by the big players, by people like BlackRock, who, by the way, BlackRock eyes SVB Assets, 𝗬𝗔𝗥𝗘𝗧𝗛 the bank's loan book. So BlackRock also in the bidding for Silicon Valley Bank. So we also had 𝗕𝗓𝗓𝗓 come out for the first time and do a CNBC interview. And I think it's worth listening to what he has to say, because it's a good message for us to get out of stablecoins. To be honest, when you listen to this, all I hear, this is actually, for me, this is just an advertisement to get out of stablecoins.
Was fully available to customers after US regulators had stepped in. What would happen if there was no intervention?
Listen to this.
Yeah, I mean, I think, first, we obviously made a commitment that using our own corporate balance sheet, as well as external capital if needed, that we would fully backstop that. Obviously, there was a lot of discussion about, what's that recovery look like? Is it immediately available? Over what period of time? And so we were very confident in our ability to do that, which is great. Fortunately, we didn't need to do that. We took a lot of precautions late last week, really starting Thursday, as we started to see a lot of things unfold. We've moved all of our reserve assets to Bank of New York Mellon, which is an extraordinary custodian, as well as held in the Circle Reserve Fund, which is short-term T-bill.
So he moved all his money from one centralized entity to another centralized entity, from one smaller centralized entity to one bigger centralized entity.
Managed by BlackRock. And so we're really trying to make sure that we've got the most solid infrastructure possible for this digital dollar. And as I expect we'll talk about, it's somewhat ironic that, there's been a lot of talk about protecting the banking system from crypto. Here we have a situation where we're trying to protect a digital.
What? Okay, I don't know. Can you guys hear me?
Digital dollar from the banking system.
There we go.
And
it looks like, can you? Okay, it just looks, as long as it's only the video that's not playing. So he basically came out and he said that
the limitations of fractional reserve banking, the embedded risk that creates, and we've been advocating for a full reserve model for digital currency for some time at both an operational and a regulatory level.
Yeah, we'll certainly get onto how those regulations are playing out.
Okay, I'm going to stop playing that. The other thing that you need to, so on the one hand, what we realize now is that because Circle, he was asked later on in the interview, he was asked, what would you have done if they hadn't guaranteed deposits? And you know what he said? He said, we would have used our own balance sheet. The only thing is they don't have $3.3 billion of cash on their own balance sheet, which means that if there was no federal bailout, then we would have been wiped out. Another question, and you're probably not safe in any stablecoin, because another big question is what this guy here is asking. If you think about why these banks collapsed because they took on long-dated T-bills, and as the interest rates dropped, the value of those T-bills dropped. Now, we know that Tether has 71% of the USDT reserve in US treasuries. We know that. They published that as part of their attestations. Is it possible that they also invested in long-term T-bills? And is it possible that their T-bills also had exactly the same thing? Now, I'm not spreading fat. I'm just saying we need to ask these questions because the same thing can happen. And what we're going back to is we're going back to exactly the same thing. We're going back to say that centralized entities aren't safe. And yes, you can be in stable coins for a little bit, but don't do it. Just if you're going to get into stable coins, use the stable coins for what you need to get in what you want to buy. And then probably the safest bet is just to put your money into Bitcoin. If you want to be out of the market, just put your money into Bitcoin. Don't stay in stable coins. You've had a warning shot. Now it's up to you what happens. All right, let's look at altcoins, because I think that's where the action's happening. So let's quickly look at some altcoins. Let's see which altcoins are running. Chinese narrative out in full force. CFX up to 30 cents, 36% up today. GMX flying, 76.95. Speaking of GMX, you know that our show sponsor is GNS. Let's quickly just go to GNS. I want to show you something. So they are growing in leaps and bounds. They are flying. Their TVL is growing. Everything is growing. Their volume is growing. Probably one that's worth looking at. Let me quickly just show you where the link is. There is a link. over here for G-Trade. So just go in, there's a link below. Go and have a look at G-Trade, the platform. It is one of our sponsors. It is a decentralized DEX, so you're not exposing yourself to centralized players. Other altcoin news. So Filecoin launching their smart contract blockchain on March 14th, which is today or tomorrow. What's today? What's the date today? 13th or 14th? It's the 14th. So that's launching today. What it is, it's effectively an execution environment, which is it's a smart contract blockchain using Filecoin, which is amazing. I don't agree with Andrew Kang here. He took a long position in ETC yesterday. He said it's my favorite Shanghai trade. Outperformed Ethereum during the merge. No actual stake coins being unlocked. Koreans and Asians love it. Range lows. I can't agree with him. I can't agree with him. I really can't agree with him. Alrighty, listen, we've got a few more minutes. Let's look at altcoins. I just want to look at what altcoins are pumping, where we're at. So Bitcoin is at 25.9, good enough. BitGet token, 38 cents, good enough. Blur, 71 cents. I did take a position in Blur. I also took an injective position, 436, not bad. So what you can see here, the altcoins aren't pumping yet. They still want to be convinced of this Bitcoin pump. And once they're convinced of this Bitcoin pump, that is when they'll start pumping. Someone's asking, how solid are the Coinbase fundamentals? They're very solid. I did a whole show last week about Coinbase. Let's do some Q&A. Everyone's here. We're all having fun. Everyone's here. Everyone's present. Let's do some Q&A. There must be some Q&A that you guys want to see, that you want to know about. Okay, I am looking. Someone just sent me all the. Let me just show you a few things on GNS, which is our sponsor, by the way. So you can see that their TVL has been increasing quite a bit. You look at their daily traders also increasing quite a bit. So their daily trade is very strong. You need to buy projects with good fundamentals. I'm not telling you to buy a sponsor, but I am telling you to look at their fundamentals. Someone says, where is the crazy CZ pump? Well, he hasn't started deploying. Look, here is the wallet. I'm going to refresh the wallet, but he hasn't started deploying. He wants to get out of stablecoins. No, he's deployed. He deployed a couple of billion. He just deployed $3 million or something like that. $3 million, yeah, $3 million. What else? VET following the Asian pump. Rolex, the Rolexes have been given away. We're going to launch a new promo tomorrow. We're launching a new promo tomorrow. So stay tuned tomorrow. If you haven't got an account on OKX yet, just remember that I told you to be there first, because the earlier you are, the more chance you've got of winning. Here's the link, open an account. That's the link. Use the Crypto Man Run link. If you do, someone says NEAR is pumping. Is NEAR pumping? I needed to pump because I took a position in NEAR a while back. And yeah, let me actually show you where I am. So, okay. I did take a position on NEAR at 264. So now I'm $20,000 down in that position. I'm not worried because I made a whole lot of money on Blur, which I cut, and on a whole lot of others. So I'm not really worried about that position. But it is nice to see that position is now coming into the money. You know, it's nice to see the positions coming into the money. I need that, and I need Algorand to go back, and then this account is a killer account. This account would have been amazing. Why are we talking about NEAR? FTM bang bang. Let's go look at FTM. Let's look FTM bang bang. FTM. FTM. I mean FTM bang bang indeed. Look at that. 46. Phantom is always great in the pumps. It always pumps better than all the other coins. It's always, you got to respect the pump on Phantom. Anyway, listen, guys, that's it for today. Love you guys madly. I'll see you guys again next time, tomorrow. Until then, have fun. Trade well, my friends.